Is 2022 a good or a bad time to be investing in Airbnb or short-term rentals? If you're new here, my name is Dibugnara, and over the last 20 years, I've been buying real estate and lending money on real estate for all types of properties. But I'm not here to sell you on me. I'm here to tell you how I did it. Over the last few years, I've amassed a short-term or Airbnb portfolio worth over $20 million. With that, it's allowed me to retire younger, replace my income from other ventures with all short-term rental income, and travel all over and even own properties in other countries. There are a lot of opinions about this right now, a lot of social media experts, a lot of things going on in the market where people are taking either one side or the other. It seems to be polarizing. People think, yes, invest, or no, there's going to be a crash coming. I think there's merit on both sides of the argument, whether or not this is a good time to invest in Airbnb or short-term rental investment properties. But I think what we really should do is go over what the economics of it are and make a decision based off of facts and numbers rather than just theories and feelings, right? So let's examine the bad economics news first. Number one, according to 2 consecutive quarters of the GDP, which is really what determines if we're in recession or not, right? If the gross domestic product is down for 2 consecutive quarters or even 2 consecutive months, it's considered a recession. What does that mean? That means that consumer spending is down, right? So investment in inventory is down. Inventory numbers are up and people buying that stuff is down. So demand is down, supply is up. Usually that's what goes on during a recession. So we've had 2 consecutive quarters, fiscal quarters, of that being the case. So that's bad news, right? 2, inflation is still high, which means people who rent are being charged more for everything. Their electric's costing them more, their gas is costing them more, their food is costing them more, supplies for the house, cable, internet, cell phones, everything is more expensive right now because of inflation. When that usually happens, their spending on other things like short-term rentals for vacations goes down. So that's also bad economic news. And 3, the housing market has slowed down from record highs of the last 2 years where there was crazy feeding frenzy to buy, and in some cities, you've even seen prices come down and be reduced. So those are the 3 bad economic factors going on right now. Now let's look at the good news. The good news now is 1, the employment in this country is actually better with over 500,000 jobs that were added in June and July. So we actually saw unemployment down, which I'll get to that number next, and the number of jobs being added to the market up. So in times of recession and inflation, that's usually not the case. This is a strange market because of how this recession was caused. It was really caused by overspending and overdemand based around money that was pumped into the economy by the government during COVID. So it's a little bit of a different recession than we've dealt with before, even though some people don't want to call it a recession. So that's good, right? The employment number is up. Bottom line is more people have jobs, which means there's more money to spend, which means there's more money to spend on things like short-term rentals. Number 2, the stock market has made a huge rebound over the last 45 days. So the S&P 500, which on average in history has been up at least 10% every single year, essentially, between 8 and 10% every single year, was actually down between 20 and 30% this year, and now is back to really almost its starting point. So the stock market has made a huge rebound, which means there's more money in the market, and the economy is showing signs of being up. 3, especially if you watch Jim Cramer on CNBC, it seems like inflation has topped out. So yes, it is high, but it seems like we're at that top number. So it can only get better from here. So if there's been spending up until this point and now inflation gets better, we're in a much better position to do what we need to do. So these are all really good economic signs. So those are the good and the bad of both sides of the spectrum, right? Let's talk about short-term rental economics specifically. So not general economics. Let's talk about economics based on Airbnb and Vrbo and other short-term rental platforms. So I can tell you personally, and I want to speak from personal experience because I have about 15 short-term rental properties. So I have a significant amount of properties. I think I can make at least an educated decision on if it's better or not. June and July of this year were my 2 best years ever as far as gross income. Now my expenses were up because inflation was up, but as far as actual gross income on Airbnb properties, they're my two best months ever, right? And what I saw was people didn't cancel vacations. They actually continued to take vacations. They continued to spend. I didn't have to drop my rates. My rates are up. So with inflation being up, my rates are up. And in general, people were still spending money. So from my own personal experience, yes, it's still a great income driving asset, and it's a good time to buy. But let's look a little deeper into the numbers. The way we really have to compare short-term rental numbers is the last time we had a normal, stable market before the last couple of crazy years was 2019. 2019 was pre-pandemic, so pre-COVID, pre-lockdowns and people running out to go on vacation when they could get to Airbnbs. So there wasn't any extremes, right, in 2019. And the real estate market was pretty much stable. Prices had been up, but not a lot like they had in 21 and 22. 2020, 21, and 22. So that's the market you're best able to compare this market to when you're trying to figure out if now's a good time to buy or not. This June and July, compared to the same months in 2019, the amount of rentals this year compared to that year were 10% higher this year. So there were 10% more rentals this year, which means that Airbnb and Vrbo overall showed a lot more gross income this year than they did in 2019. So that shows a growing platform. That's positive, right? On the flip side of that, and this is a number that we should talk about and think about, there was more vacancies than it had ever been before. So there were more houses available, empty, than they had before. But that number is a little bit skewed because there's more houses ever on Airbnb than there ever has been before. That number is up about 20%. So with increased inventory or increased homes available, there's going to be less occupants right now. So even with occupancy increasing, it wasn't enough to fill the demand. Overall revenue for short-term rental will be almost double this year compared to 2019. So 2022 compared to 2019, the revenue made on short-term rentals is almost double. So that's a really, really good sign for a market. Even if that came down a little bit, it would still be a lot more than it was a few years ago. So we're in a very much so a growing market. This is what I expect, right? So after looking at all that data, right, this is what I expect you to see from the market. Number one, the homes that are not vacation homes on Airbnb that were able to thrive over the last couple of years because people just wanted to get out of the house, they needed more space, they needed places to go. The houses that don't have anything unique about them, they don't have a beach, they don't have a lake, they don't have casinos, amusement parks, wineries, pumpkin picking, anything that's an attraction to bring people into them besides the house, I think are going to suffer in this market. And I do not think they're a good buy for the present day market because you're seeing a real estate reduction in prices. With that, if the house isn't giving you any other reason to go there, like another attraction, like something that's vacation worthy, right? Someplace you would go for a vacation, then I think those houses are going to suffer. I think if you have homes that are meant for vacations, that have other attractions around them besides just your house that people are going to want to visit, you're going to be fine. This market will either be stable or up over the next 3 years. So I find that those markets, if you're going to buy, those are the markets you want to buy into because those are going to be the best. I think that you will see some people suffer in this market, but it's going to be more of the properties that were normal. I also think there's something else to look out for. If you're going to examine a property, whether or not it's a good buy for Airbnb or not, you must go back to 2019 and look at the zip code, look at the homes in that area, and look at the state to see if that was a good Airbnb state during that time. 2022 and 2019 are going to be very, very similar. In the middle of that, 2020 and 21 had some areas that blew up, had great revenue, but that won't continue that way because it was good for the time, like mountainous areas. Mountainous areas were the hottest areas ever for short-term rentals during COVID. Right now, those areas are down. So if you're going to buy in one of those areas, don't base your numbers off of last year. It's really, really important that you go back to 2019 or present day and base your numbers off of buying those property off of those numbers. I think if you do that, short-term rentals are a great buy still, and you can still find value in that. I'm going to reiterate what I've said to you in the past. My short-term rental properties, my Airbnb properties compared to my long-term rental properties, my profit on those properties is 2 to 3 times as much. It is more work, but it's more money. The majority of my properties are in vacation areas. The properties that I've let go or I've sold, that I've gotten rid of, are the properties that weren't like that on the platform. They've either changed back into long-term rentals for me, or I'm selling them. I think that as a real estate market, if you're looking to unload properties, this is still a good time to sell if it's the right property. But as an income-producing property, your short-term rental property is a great property to have if you're in vacation areas. And if you want to buy, this is when you want to look. And by the way, the best time to look for vacation rentals is after hot season. So if you're in the Northeast or in cold weather states, September, October, November, when people aren't renting because it's not as warm, that's a great time to look for your property. If you're in warm weather areas, Florida, California, Texas, you want to look in seasons, you're getting out of the season when it was best to look. Like you're in Florida, you want to look in August because it's really, really hot there and that's when people aren't that interested. You want to look when there's less competition. We're always looking for the blue ocean that has less people in it, less competition, not the red ocean that has a ton of competition. So ultimately, I believe that short-term rentals or Airbnb purchases as homes and investments are still a great buy. You just have to be searching for the right areas and look at the numbers. Don't just go off of facts that you think because you're seeing it on social media and in the press today. Go back to 2019, pre-COVID, and look at the numbers then. Look at the numbers over the last 90 to 120 days. Those are the numbers you should be looking at to make your decision. I hope this helped. For more videos on Airbnb and short-term rental investment tips, go to my YouTube, that's Dibugnara.com. I hope this helps. If it does, leave a comment, leave a like, shoot me a message. I'd love to hear of what I can give you that'll help you even more. Thank you.